So Andrew, you know that we've talked a lot on our videos about how to avoid taxes when it comes to your retirement income, right?
Right.
Yeah, but what a lot of people don't realize is they may be sleeping on one of the biggest tax breaks that they may experience in their entire lives, and it has nothing to do with their retirement income, but everything to do with the equity in their homes. So stay locked into our short educational video today as we're going to help you understand how you may be able to qualify for one of the largest tax breaks that you may ever experience. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to make the difficult and confusing retirement process simple.
Absolutely, Andrea. And we do this simply by incorporating a team of expert advisors, ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a comprehensive and holistic retirement roadmap that's going to let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So, Andrea, if you're actually selling a home in 2021, what you are going to be experiencing is what is known as a seller's market.
You're right, Carson, because I was reading in the Wall Street Journal that this couple paid $300,000 more than the asking price for the home that they bought.
Yeah, and that is absolutely not uncommon in this particular marketplace. Now, where we live here in the Dallas-Fort Worth area, you could put your home on the market, Andrew, and within 24 hours, you will have that home under contract and ready to be sold. So we know that with this increase in sales price comes a windfall of money into our pockets. And so you can use that large windfall of money for anything that you like. Maybe to start a business, maybe to pay down debt, maybe to fund a kid's education. But did you know you can use that money tax-free? Now, if you did not know about this, then you have absolutely tuned into the right channel today, as we are going to talk about how you can qualify for one of the largest tax breaks that you may ever experience. But before we do that, there are always two rules to retirement income that we like to give you. Andrea, what are those two rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
So let's go ahead and talk about how you can actually take the equity from your home and not have to pay any capital gains taxes on it.
So, Carson, who qualifies for this major tax break?
Well, I'm glad you asked, Andrew, and I see that you're very curious about this tax break. But yeah, qualifying is really the key. And in order to qualify for this major tax break, one, it has to be your primary home that you sell. So it can't be a rent property. It can't be your condo that you're leasing out, whatever it may be. It has to be a primary home that you have lived in for 2 out of the last 5 years. Now understand, it doesn't have to be consecutive years. So you can live in that house for 1 year. You can move into your condo and then move back into that home in year 4 and live in that home. As long as it's 2 out of the last 5 years, you can qualify for this major tax break. Now, if you're single, the tax break that you get from the sale of your home is up to $250,000. And if you're married, filing jointly, the tax break that you can get without paying any capital gains tax on the sale of your home is $500,000. Now, Andrea, there is one caveat that I will like to point out when it comes to getting that tax break of $500,000 if you are married. Now, both of you have to have lived in that house for at least 2 out of the last 5 years. So what does that mean? Let me give you an example. Let's say I own a home and I've lived in that home for 2 out of the last 5 years. We meet and we get married, and you have lived in that home for only 1 year. Well, in that scenario, if we sell that home to move somewhere else, I would only be able to qualify for $250,000, even though we're married filing jointly, because you have not lived in that home 2 out of the last 5 years. So that is a very important thing to take note of if you're going to be able to take this exemption.
Okay, so how many times can a person get that tax exemption?
Well, that's a good question as well, Andrew. You can utilize this as many times as you like, as long as you have lived in that home for 2 out of the last 5 years. So you can do this multiple times in your life if you actually follow that rule. So it's not a tax break or a tax exemption that you can only use one time. You follow the rules every 2 years that you've lived in that home. You can sell that property and receive that tax break.
Well, what if you go over the tax exemption amount?
Another good question. So if you go over that tax exemption amount, what you're now talking about are net gains. That's what we're looking at now.
Okay.
We're looking at net gains. So let me give you a really, really quick example of how this may work. So let's say you're single. You bought a house for $400,000. You get ready to sell that house, and it's valued at $600,000. Well, when you sell, obviously that is a $200,000 gain on that property. Well, as a single person, you know that you have a $250,000 tax exemption there. So no worries in that particular situation. You don't have to pay any taxes on it. But now let's say that house, that same particular house, you sold it for $675,000. Well, in that particular case, Andrea, you now have a $275,000 net gain on that property. Well, in this particular situation, we know that we have $250,000 that is exempt. You don't have to pay any capital gains tax on that. But we have another $25,000 that we've actually gone to that we will be subjected to capital gains taxes. Now, that's going to, of course, depend on whatever tax bracket you may be in, which we don't cover in this particular video. But of that $25,000, that is the amount that you will have to pay taxable gains on. But let me give you a really good money hack here that you may want to think about if you fall into this particular scenario. We just discussed about if you have a $25,000 gain, that you would have to pay taxes on that amount above the $250,000. But let's say you had a much larger capital gains tax, and what you could actually do if you fit this particular scenario. Let's say you had a $750,000 taxable gain on your property. And let's also assume that maybe you had an adult child living in that home with you. In this particular case, Andrew, let's say you also are wise enough, you've spoken with an attorney or you've spoken with an advisor, and you've actually made that adult child 1/3 owner of that property. Now they're 1/3 owner of that home that you have. So you sell that home, you as a married couple can actually receive the tax exemption of $500,000, okay? And that adult child, as long as they've also lived in that home in 2 of the last 5 years, they can use the tax exemption of up to $250,000. So in that particular case, you have a $750,000 tax-free benefit from the sale of that home. And that's why you want to talk to someone who can help you with these type of financial matters for sure.
So what happens if one of the spouses die? Do they still have that tax exemption?
That's a really good one here, and I'm sure this is probably going to be one that many people are going to want to know about. So I don't know how it works in every state, Andrew. I do know how it works in our state, a community property state, as far as what will happen upon the death of a spouse when it comes to your tax exemption for that home. Now, as long as you sell that home within 2 years and you're still unmarried, so let the bereavement process take its course. So you're still unmarried, you can still receive that $500,000 tax exemption as if you were married. And there's a very interesting concept when you're talking about a community property state. So if you live in a community property state like Texas, there's even another caveat that will benefit you. Upon the passing of a spouse, your cost basis also is stepped up. You get a step up in cost basis. So what does this mean? Let's say we purchase a house for $500,000. I pass away, and that house, upon my passing, is valued at $900,000. Well, guess what? If you sell that home within 2 years, you not only get the $500,000 tax exemption, but you also get the step up in basis of $900,000. So what does that mean to you? You can sell that home for $1.4 million and not have to pay any taxes on the gains.
Wow, that's some great information there.
Well, I really hope that it helps people who are watching this video today and providing them some great insight for sure. Again, I really hope that the information that we shared with you today gave you some great insight on how you may benefit from a major tax break from the sale of your home. These videos are created for educational purposes only, and that you should always consult with your own financial advisor, your own tax advisor, and your own attorney about your own personal situation. Also, if you are looking for a fiduciary financial advisor to help you with these types of complex financial matters, we highly encourage you to click on the link provided in the description below and learn how you can become one of our high-value clients. For more information on this topic or any of the topics that we've shared in our prior videos, do not hesitate to reach out to our office and leave any questions or comments in the section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.